Give me 5 minutes and I'll trade your 5 messy lines for 3 AI-found levels you can actually plan around. Most traders eyeball horizontals, feel clever for a day, then nudge the lines after price moves. That's bias dressed up as analysis. We're not doing that. We're going to let the data vote, group the votes, and draw lines the market already respected. Here's the whole move in one pass. Add machine learning key levels by AlgoAlpha to a clean 1-hour chart. Set pivot length to about 10 to 15 so you catch real swings, not scalp noise. Set pivot memory to roughly 300 to 600 so you have enough history to smooth without going sluggish. Turn auto number of levels on so the tool auto picks how many levels actually exist. Turn metrics on so you can see how many votes each level has and how tight those votes are. That's it. No tinkering midstream. Under the hood, it's simple on purpose. Every pivot is a vote. The model groups nearby votes together so clusters form where price has reacted before. A built-in quality check chooses the right number of clusters so you avoid both too many lines and too few. Each cluster becomes a level. Strength comes from 2 things: how many votes it pulled in and how tightly those votes sit together. Think neighborhoods, not single pixels. Price reacts to areas where crowd memory is thick. Now watch it forward. As new candles print, you'll see reactions bunch around those machine lines, especially the first clean retest and the classic break and retest flip. You don't need to guess, just let the map do its job. From here, I run 3 fast plays you can copy today. First touch reversal. I only care if price traveled a decent distance first. I want a clear reaction, wick rejection, and a close back inside the zone is ideal. My stop goes just beyond the other side of the zone. I take partials at the first logical target and let a runner work toward the next level. Break retest continuation. I want an impulsive break that shows intent, then a quick retest from the other side. If the level holds, I'm in, with a tight line in the sand just past the zone, and target staged at the prior swing and the next level. Trend pullback to strong level. Higher time frame bias leads price pulls back into a high strength level. I look for continuation behavior and I trail under structure instead of guessing tops and bottoms. The skip list protects your P&L. If price is ping-ponging between 2 close levels, I sit out. If a level shows low strength or widespread, I demote it. If major news is minutes away, I wait. Maps help, storms don't. Execution is boring by design. Entries only at or around mapped levels with confirming behavior. Stops beyond the zone, not inside it. Partials at defined targets. A trailing plan that respects structure instead of feelings. Boring is good. Boring pays. Review is where you grow. Once a week, 5 minutes. Screenshot any trade you took away from a mapped level and ask why you broke the rule. Tag every trade as reversal, break retest, or trend pullback. If one play drifts or underperforms, cut size or pause it until you recalibrate. Keep settings stable for a stretch so you actually learn how your levels behave before you tweak anything. Quick answers. Do the levels repaint? They update as new pivots appear because crowd memory evolves. Adaptation is the point, not hindsight. Best time frame? Use one you can emotionally handle. Most start with 1H or 4H, then step down once the process is consistent. Will this work on your market? If it's liquid and prints clean pivots, the clustering can map it. These are maps, not predictions. Your edge is rules and risk. If you want this exact workflow, add machine learning key levels by AlgoAlpha now. Click to add it to your chart, turn auto levels on, toggle metrics on, and plan trades only at the top 3 levels by strength. Subscribe, drop map in the comments for the quick start checklist, and trade with rules, not guesses.